Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that the buying that we've seen over the last couple of sessions continued. And on the upside, the next resistance level we had was 74.5, and the market tagged that, and we saw some responsive selling at that level in the overnight session so far. At this point, heading into the open, buyers can still maintain control, especially if the market holds above the 1970 to 71 area. That would tell us that the buyers are still in firm control, and the market could then head up and tag the 1978 to 1980 initial resistance zone with potential to fill the gap at 1980.75. So, the main bigger picture idea that was discussed in yesterday's trade plan video, we've seen that so far that has been playing out pretty well, and the market has been slowly just heading higher and testing some of those upper resistance areas. But heading into the open, the 73 quarter to 75 quarter is the immediate resistance. It has been tested a couple of times at this point. So, either at this point the market's going to, balance a bit and blast through that zone off the open, or we can get some failure at that zone for a pullback down towards the midpoint VWAP around the 70-71 area and potentially down to the 66 to 68 micro bull bear zone. That's the area we're going to be using to establish our overall directional bias for the market from here on out. So on the day time frame, if the market holds above 66 to 68, that would tell us that the buy side is still in control, and we could simply balance above the micro bull bear zone. In the event that the market breaks below 66 to 68, it doesn't necessarily mean that this market is now ready to put in a deep pullback or a big retracement. Overall, this bullish theme would still be in play, except then we could come back down towards towards yesterday's lows, towards 62, 64, perhaps find some buyers there, and then start to balance in the event of an extreme weak move on the downside. 56.5 to 58.5 would be the next zone in play, but given how strong this market's been and given how well it has held up in the overnight session, I think that would be quite an exhaustion move down to 56.5 to 58.5. I don't think that we're going to be seeing that big of a correction because we don't really have any major econ reports due later on today that can really result in any major selling. At the same time, there isn't any catalyst to really drive the market big beyond 78 to 80 on the upside either. And then we have the FOMC minutes, I believe, out tomorrow. So we do have some econ out tomorrow, and for that reason, today we can simply balance at some of these higher prices, or perhaps just consolidate some of the recent gains. So at this point, buying at resistance, buying 73 quarter, 75 quarter for a move up to 78 to 80 is a bit of a risky play, right? You do want to get some good trade location on the very small time frames and be defensive on any long trades that are being taken up here because the market has potential to just chop around. Even though the market has been pretty strong over the last 3-4 sessions, and we've seen this big directional move to the upside, at this point the market is testing some pretty decent resistance again, and we've seen that on the way up it has struggled at these resistance zones. So if you saw the trade plan video from a few days ago, we talked about that idea that now that the market is approaching some bigger resistance, we're seeing that it's a bit of a back and forth type price move. It's not just a blast through a resistance zone. It kind of goes up, finds sellers, balances a bit, goes range bound, then makes another swing higher, then goes range bound yet again. And that's been kind of the theme ever since we've been hitting some of these more important resistance areas above 1965. So I think that theme is going to continue even today. We've seen it continue in the overnight session where the move up towards 74 resistance attracted some sellers and there were some rotations put in, and then we got another retest of it. And I think that the overall theme could be in play, and that could continue on the day time frame today, where now that the 73 quarters, 75 quarters has been tested a couple of times, there's potential we could go through it, but then at 78 to 80 or near that 80-75, we could stall yet again and kind of do some more balancing in a range before we head even higher. So right now, even though the buy side is in control, I think that because we're approaching these more important resistance areas, we do have to be just very mindful on the very small time frames on where we're entering the trade. And you want to enter kind of on that pullback where short term the downside is exhausted and you can get some price edge. So at the very minimum, price doesn't just slice through your buy order and ends up going to the next zone. So you do have to be a bit careful at this point and just make sure that you're being a bit conservative on any long setups at these more aggressive prices. But any pullbacks into support, 66.68 is a decent spot first test. Just calls for a little bit of caution because it is near the overnight lows and sometimes the market can liquidate below that. But that's a spot where buyers can still step in the event of a pullback. 62 to 64 is a very good spot to try a long first test, and then take a scale out at 3 or 4 points, and then looks and see if you can get a bit more out of the trade. But right now, the directional conviction is to the upside, but because we're hitting some of these more important resistance zones, and because the market is a bit exhausted up here, I think it's going to be a little bit of a struggle to continue higher, or you can get an upside move and then just balance and go sideways because there's really no major catalyst. Volumes are not really very heavy right now, so that's kind of the theme of the market, and you have to adjust your execution to kind of align yourself, with that theme and just be mindful of the theme that's in play. So those are the main thoughts heading into the open. Let's see how the market reacts to the 73 quarter, 75 quarter off the open. If it rejects it yet again, we could be looking for a pullback to the bull bear zone. And then let's see if buyers can hold it here. If 66.68 holds, then we can balance at higher prices. If it breaks, we can still balance, but just in a wider range. The overall bullish bias in the market, which is in play on the larger time frames, is still going to be in play. I don't think that's going to shift today. So long setups are still the more focused side, and we do want to be more focused on long setups. Shorts are okay once the market gets a bit exhausted and when it's on first test of the resistance zone. So for example, push up to 80 would be a good spot to perhaps sell the market and look for a rotation. But overall, we're not looking for any big trades in the market. It's about risking 2 points, trying to make 3 to 4, and I think those are types of setups that are going to work well in this lighter volume, range bound type market where we're just kind of trudging higher. So those are the main thoughts. Let's see how well the buy side holds it up this morning, and we'll take it from there.